So hello guys, welcome back to another session. Okay, and this is going to be around day 7. Okay, and we are going to backtest. We are right now 4.81% up on our total strategy. Okay, and sorry, 2022 mentorship model I am using, and my best win rate percent is only 30%. Why? It is because of the reason I am targeting higher risk rewards. Okay, I'll see if I should change this or if I should keep it same. Okay, or I should I should be able to identify the wrong trades. Now let's go on. Okay, backtest. So we have this session 4.8% of the profit. Okay. See, as soon as we go above 500, right? Above $500 of profit, we'll start taking the minimum loss is $20. Okay, that's it. Because obviously we need to increase our base loss. Okay. Now let's start it. So as soon as we go over $500, we are going to risk with $20 as the minimum point. Okay. Now let's see. Alright, let me just load the layout. Okay, so here we were. Let's first analyze the daily time frame and then see what is happening, and then we are going to go on the lower time frames. Okay, so let me just erase these drawings for now. Okay, so we have seen the market rise from this point, it went up higher at this point. Okay, and then it exactly touched the equilibrium. If I just show you, can you see this is the equilibrium line. Now if you just zoom it and go on a 4-hour time frame, then you will see that it has just touched that equilibrium and then bounced back. Got it? So this is the downward pricing. Okay, now these are some equal lows. Okay, and some fair value gaps that needs to be taken. Okay, this is the one side of the direction of the market. Then the other side is actually from this down to some kind of high somewhere in the middle of this thing. Okay, so what we can do in the this price swing, okay, we can go on to the equilibrium point. Okay, so there are two ways. Either we are going to go high to maintain the equilibrium of this thing. So let's just check the equilibrium. What is the equilibrium? Okay, this is the price swing. Now the equilibrium is from this point to this point. Okay, 4-hour time frame. Okay, and the 0.5% near above is going to be above these highs. Okay, so let me just mark this equilibrium line. Okay, now here we are. Okay, I just need to check if everything's good. Okay, yeah. Now what we are going to do, there are two type of things that can happen. Sell side liquidity is taken, right? If the sell side liquidity is taken, okay, the price should come back to this particular equilibrium and then it should gyrate off, right? So first scenario, this thing, blah 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 blah, and then blah, and then this is what is going to happen, right? And so according to this, my daily bias should be bullish. Okay, I am saying bullish. Now I should anticipate, like, this is not a very strong bias, the market is not dumb clear to me. Okay, so but yeah, there are well equal lows that can be taken. Okay, I just want the market to gyrate at least at this point. Got it? Now if I see the equilibrium from this point to this point, what is the equilibrium? Somewhere over this zone. Got it? Let's go on to 1-hour time frame. 1G is not a time frame, 1 hour is a time frame. Here we are. Okay, the price downward swing came back up. I should somewhere look. Okay, this is kind of, okay, this is the high point, right? If these highs can be taken, then I expect the market to show me a swing back. Okay, or this is a high time frame fair value gap. This is the biggest fair value gap that has not been touched yet. Okay, sorry, the fair value gap created at this point, but the 1 hour time frame is this thing, and you can see this is actually touched, it is mitigated, so it has a higher chances of the price coming back to touch it again so that it can go down. Done. Here we are done, and then we can move ahead. This particular thing, got it? This is a high time frame fair value gap. Not high time, I'll just say it to be 1 hour. time frame fair value gap. Sell side's taken, right? Okay, sell side liquid taken, sell side liquid and sell side also taken over here. Now let's anticipate what is going to actually happen, right? Think about this. If I go above this particular point, I can go up to that. There's no fair value gap in here, but yeah, there's a fair value gap in here, right? Can you see? This is the moment of the fair value gap. To reach to the equilibrium point or touch the equilibrium point, it has to actually go through this fair value gap. It means it is trying to invert this fair value gap, right? Done. It has respected the fair value gap, but if it goes through, the fair value gap will be inverted. Okay. Let's see what I can do. Not a strong bias I'm able to form. What's the time right now? It's 8:30. Okay. I'll anticipate for the market to go higher. There's a displacement that has been shown. Okay, the recent high has been broken. So 15 minutes. Okay, the market has already given us the opportunity to enter, but we didn't enter. This was like, recent highs broken, fair value gap created, and it is going to target the equal highs over here at this point. Now let just let the market gyrate to its point where it is going, because it's 8:30 and I was already profitable long ago, so I'm not going to take any other trade. Think about this, what can happen. Okay, can't form any bias. Okay, let it play out. 5 minutes is better. At least these highs I want it to be taken, right? This is the target point. Let it go to that point and then I can anticipate an entry. So the fair value gap, these highs are taken. Okay, that's what I anticipated for this high to be taken. At least the price should go to this point so that it can reach the equilibrium of this downward price swing that we are discussing, right? This downward price swing from here to here. This downward, at least this point should be the equilibrium. Okay, got it. Now let's go to near to this point. Okay, and zoom it out. 15 minute is okay-ish, right? You cannot go below this point. Okay. The equilibrium has been touched, as I told you, but I was not able to take any kind of entry because yeah, this entry over here, this thing, and obviously it should reach for equilibrium because the next lows are way far away. It's far away, right? It has to first go to the equilibrium, because if it reaches back down there, then going back to the equilibrium will be too much of work. Okay, got it. Now here's the price narrative we are doing. Got it. Let's see what it's trying to do. If it somehow it takes to this fair value gap. Okay, is it going to be taking this fair value gap? Think about this. This right now is at, it's 12 a.m. nearly. Okay, right. Nothing's going to do. So I'm not going to do anything. I'll let the market come back to that 6 a.m. time. Then I will see what is happening in the market, and then I'll just start forming my entries. The day is Wednesday. It's going for, this is the price swing. Okay, is it reaching the, wait, not this thing, from this point, sorry. So this is the 0.5%. What is this? Oh, it's 4:15. No trades for the day because there is no gyration I could see. 0.5% equilibrium. It is gyrating between these highs and lows. But why is it so? Now because the price has reached the equilibrium of this point, and now if it wants to go lower, it can go lower without any hesitation. So this is the price swing back to the equilibrium, and it will just get back to that point again. Got it. Now let's see what it is trying to do. Okay, so here we are at around 7:15. The market started to rally downwards. Okay, so this low is already taken by this low, so there is no generation of the liquidity. Okay, now it's going on. Let's see, and show me displacement. What's the time right now? 16:45. Okay, I think the price is trying to gyrate to this fair value gap, right? To this fair value gap. I'll expect the price to move till at this point because there's a up close candle, right? I have to understand the order blocks first because I don't understand order blocks right now. I'm inefficient in understanding them. Yeah, here we are, and and so let's go on a lower time frame. 3 is enough, right? See, these are equal lows that are formed, right? Equal lows. I feel like these are equal lows that are getting formed. It is somehow trying to take the liquidity of these guys. Okay, some sell side liquidity has been generated below these lows. This is going to be taken. Otherwise, this how can I anticipate any entry? I don't think no entry can be found. Okay, the price reached equilibrium. What else am I looking for? Why would the price go to this particular point? There is no reason, right? There's no solid reason. Hmm. Okay, what should I do? The only thing I have left is to just let the market gyrate. Let the market reach to the point it wants to. It is coming out to be the Thursday of the week, so I don't think I'm going to take any kind of trade in this week. Okay. It's Thursday 9 Feb, right? Market went up, gone up, then again it is going to go down. Okay. Mm, somehow these lows can be taken. Mm, fair value gap, price and okay, price fall, fair value gap, enter. Got it. There's no falling. Here's a shift in the market structure. Then I can anticipate it to go lower. Till what point? Till this point, I'll expect it to go lower. This is the lowest point. Okay. So you should mark the most important and the most important up point, most important down point on the graph itself. Okay. Okay. Now we have this point over here. This price broke down. We can enter at this fair value gap, right? The price is not way too high, not way too loose. Okay. I'll have to put my entry somewhere at a very logical place. Now let it go higher. Okay, I can form a good entry over here. So price broke down, went into the fair value gap. I can put my stop loss at this very point. Okay. Now the equal has. Okay, again. Also, is there any kind of displacement? Yes, it's a good displacement. Then I can expect it to go down. So yeah, short. I'm going to take a short. If I put my percent target over here, I don't think it should change the market structure, because if it's going to flip from this point, it is going to change the market structure. So let's keep the highs at this point. But although there is like a good fair value gap in here, right? Can you see? There's a good fair value gap. Okay. Got it. Okay, if it takes out this thing, it takes out this thing, that's it. I'll enter. So open position, I'll sell, market, current balance. I had a loss last time, so yeah, we are going to go with 10%. This trade. Now let it be. Uh-huh. Uh-huh. Hey, is it the time of the day or not? Okay, it's the time of the day. So at the 12:30, the price went up. It means it can manipulate the market to go up. So, oh, nice, nice. Here we have. Price got taken. I'll have to wait for a moment. The market starts shift. Okay. Now we can expect it to go higher. Is it trying to reach this point? Because this is the displacement. Okay, I should see this type of displacement, not these small types of variations. This is the displacement we are talking about. And if there's a market structure change, then definitely something is going on. Okay, something can be done, right? Okay, now let it wait for the market to come back to that fair value gap. Oh, bro, what the hell? Damn, it didn't even go to that point. Okay, at least let the price go into that fair value gap. Okay, that's it. Oh, so there's no market structure shift. Like there's a market structure shift, but you can see the price didn't come back to the fair value gap, so no entry is being formed. So yeah, let it be. No entry is formed. We'll leave it. Okay. So it's been Thursday, 14:40, and yeah, wait for the 17:30. I'll wait for it. Okay, the market broke down. This is 17:50, and now the price is in this fair value gap because it's a higher swing, right? I can expect the market to go lower or not. So before this is 17, 18, 17, 18, 17, 20. Okay. So before the market started, it rallied upwards. Fair value gap, right? Is it a good displacement? I think in my opinion, it's a good displacement. Market structure has been breaking light. Because of good structure, we can expect the price to actually go down, continue downwards. Okay, after respecting this fair value gap, and I can put my stop loss at the high of this thing. Okay, yeah, I can easily put it right over here at this point, and I can expect it to go lower. And let it be. So here we are. So put the price at this high. Okay, I don't need to be that much cheap, but yeah, I'll just do it somewhere over this point. This will be the last trade of the week. Okay, and I'll wait for the next because after this point it is going to be, you know, what do you call it, it will be it is Thursday, right? So the next day will be Friday, right? And I'll avoid trading on Friday. So yeah, open position, all day market, selling, current balance 0.1, done, place trade, save it. So yeah, let it go out, guys. If it wants to go higher, let it go higher. Last trade of the day, that's it, done. No more trades. Okay. The price fell down. Yes, it broke the okay. Can I say I'm not gonna do anything right now? Okay. What it did, bro? What it did? It just touched this thing. If I could have kept my this is the swing price, high price swing. Could have kept my stop loss here only, then it would have broken down, and then obviously it will go with momentum downwards. Okay. Next time I'll try not to be cheap. So my bias was right, but my entry was not. Drawdown is just somewhere around from this point to little this point. This is drawdown. 25. Just one pip of stop loss has taken me out of the whole trade. Okay, so you guys can imagine how important that trade was. I'll try to keep next time. I'll try to keep the my trade stop loss on the highest point of this thing. Okay, I'll try not to be barging, but yeah, I'll have to some way win. Okay. The fair value gap in here as well, I guess. Uh, yeah. So fair value gap at this point as well. So it just takes out a little bit, right? It didn't go over this point. Okay. We can expect or call this to be the displacement, and then we could enter at this point to actually put the stop loss at this point. Then we could have rallied to, okay, right? Okay, good, good, good. But let it be. Can't take any trades right now because it's Friday. Okay, no trades to be taken on Friday until unless there is a good swing. What's the time right now? It's Friday. Whatever time is, I'll just reload because I can't save it. It means next time I'll try to take a trade. Hi, hello, please, can I ask a question? Hi. Hello, hello. I didn't see your question. Sorry. Okay. Hi, just a second. Sorry, I was actually trading. That's why I was not able to see your question. Let me just keep my here so that I can see everybody's questions as well. Somebody answers right. Okay, good. We can just, yeah. Hi, hi, Abdul. Hi. Okay. It's been day 7. Hi, hello, hello. Please reply. Can I ask you a question? Yes, you can ask a question. Don't worry. You will write your question. Okay. And I'll just answer it. No worries. Let me just load a layout once again. 2022 GBUSD. Alright. Ready. This is the trade we are missing, guys. Think about this. Think about this. And sorry, I was not able to reply, Abdul. Okay. Let's go back to this point. Yeah. We were on Friday, right? Somewhere on the this Thursday. So we are on Friday. mm, okay, we have to go. Let it out. I can't wait. Obviously the price is going to take out these lows as well. And is it going to take out this low as well? Yes, it is going to take out this low as well. I could have taken my entry at this point as well and then put my stop loss at this point of the high thing, and then I could have targeted this thing. Okay, let's see what will happen if I would have done it. It's gyrating to that low. Let's see, it is going to. Let me see. It has taken out this low. So if I would have put up my target at this point, then it would have been taken, right? But let's see if this target gets taken or not. I'll have to wait or not. It's 2:48, 2:30. So the market has entered now. The Asian session has started. Let's see what is going to happen in Asian session. Mm, okay. So this is the downward price swing. At least the price will go to the I'll say it will go to the equilibrium of this downward pricing. Then I can anticipate it for it to go down below this red line. Okay, but the week is about to end, so I'll try not to take some unjargon trades. So we have this 10 10 10 10 10. Okay, we have to increase our win rate. We are actually on a losing side. This is not good. Okay, I'll have to improve my entry tactics. Only then I'll be able to do something for it. Okay. Mm-hmm. uh, I want this liquidity to be taken. This is the high side liquidity, and this is the sell side liquidity. Now I think I should go on a 1 minute time frame. 1 minute. So this is the buy side liquidity. This is the sell side liquidity. Let's see which one gets taken. Okay. Let it be. Buy side, and this buy side liquidity didn't get taken. I can't do anything now. Now. Mic check. Hello. Again, it made an equal high. These highs are about to be taken, but what's the time right now? It's 3:45, right? On the time of the day, these highs will be taken. So it is gyrating. Okay. At this point, what's the point right now? It is 16:51, right? Equal highs have been formed. These equal highs, I wanted them to be taken, right? I want to see a displacement. I want to see a displacement. Okay, nice. Here's a displacement, right? Let's go on. What's the time right now? 30. So we are done with half an hour of the live session. Go on, check out 15-minute time frame. Okay, went up higher 15 this is the 50%, right? Then what is the equilibrium? Below this equilibrium, these are equal lows. Okay, so this is the equilibrium line, and there are no any other. can I expect it to go downwards? See, at this point of time, it's 17:15. It has taken the sell side liquidity. Then obviously, I think it's going to go take out the buy side liquidity as well. And also there are buy side liquidity well in here as well. Okay. So yeah, some liquidity is taken out. Let it wait. Go downwards. Okay. Oh, sorry. Go upwards. If I see a displacement in the upward direction, I can't see any displacement in the upward direction. I have determined well. If I see, is there any target downwards? Yes, there's a target, but this is way too downwards. Okay. Let me see if the price has reached this equilibrium or not. So, this is the point, right? The price has reached its equilibrium, bounced back from it, but again broke the equilibrium. You can see it has broken the equilibrium, right? Then there might be some reason it has broken the equilibrium. We'll see. Okay. The price is right now at its equilibrium point, exactly at its equilibrium point. Okay, for the market structure shift for to be seen from my side. Okay. Mm, let's see. It's in the fair value gap. Yes, it's in the fair value gap. Can I take a downward trade? You know what? I should not take a downward trade. What do you think? What is this 15 minute? What is this fair value gap? What is this thing? Oh, it's coming out from so back and taking the support and resistance from this point. Got it. Okay, just a second, guys. Uh, wait. Okay. Now, uh, should I go or not? See, I have doing sell, buy, sell, buy. Okay, but it's okay. 51. Am I following money management or not? This is 350. Ah, you know what? I'm not going to take a trade on this thing. I can't feel it's good. Okay, I think this is the new day. Monday has started, right? This was some Saturday training, Saturday session. So new week has started. We are right now on 13th Feb. Okay, somewhere mid of the second month. Okay, and let me just leave this thing done. Okay. Let's see. Go on a 1 day time frame. Let me save this out. Now think about this. Mm, in my opinion, the liquidity, see, the drawn liquidity should be the buy side. Because if I see about the sell side liquidity, the good and the best sell side liquidity I'll see is at this position, which is far away to the reach. Okay, because this downside liquidity or the sell side liquidity is way far away, but these buy side liquidities, this buy side liquidity, okay, and this buy side liquidity and this buy side liquidity, these liquidities are not taken yet. And in my opinion, this should be taken before the price wants to gyrate to any other position, right? Yes or no? Yes, it should. But what will happen? Think about it. What will happen? Okay. Hi, hello, please reply. Can I ask a question? Okay. I was not able to reply the only chat I got on my live stream, but it's okay. Mm. Okay, so I'll expect the draw on liquidity. See, the liquidity has been eaten out. Okay, this sell side liquidities have been eaten out. Okay, the price gyrated upwards, right? Let's go on a weekly time frame, see what is going to happen. By my side on the weekly time frame, this the equilibrium has been reached, the price bounce back again. Now, obviously, the sell side liquidities are to be taken yet. Okay, so I'll anticipate for a sell side liquidity or sell side entry. Okay, got back to that 1 day time frame. Get back my drawings. Okay, these highs are marked. Okay, my daily bias would be, I'll say, it took out these highs and then it went back lower. My daily bias, if it needs to go to sell side, there's no sell side over here. Okay, it is already the sell side liquidity sweep. But let me go on a lower time frame. Sell side is not taken well. So it just went down and back up. Got it. Hmm. Think about this, Ritik. Think about it. I'll say delete this thing. Stops. This is the zone. The gap. See why I put at this point. Why I put a red line? It is because of the reason you can say. You can see if you go on 1 hour time frame. There is. Oh, sorry, not 1 hour. Maybe on 15 minutes. I'll see. 15 minutes. You can see. This should be the just a little downward. It should be okay. This is an up close candle, okay, and I anticipate for this up close candle is going to keep the price lower unless the price is way too much bullish, okay. So see, the price has been rejected from that bullish candle, okay. Now if the price wants to go higher, it should break these highs and should take these liquidities in order to go above to take this liquidity and this liquidity, got it. So one of the considerations in price would be at this high as well. New week is about to start, okay. Now yeah, here we are. Mm, now what should I do? What should I do? What should I do? So here's the fair value gap. Can you guys see this fair value gap? Yes, we can. Okay. Now it went down. It inverts the fair value gap. Okay. It took a return to that fair value gap. It should actually do this thing, right? Correct. This is what it should do. Somewhere in my opinion, right? Because the fair value gap has been inverted and there's some equal highs that are placed over here and some equal liquidity over here. So if the price wants to gyrate, it should either take out the sell side liquidity first and then go backwards, or either it should clear the displacement back to the fair value gap and then it can go above. Got it? Okay. Ankesh, hi Ankesh. Okay. At least I got some different chats in here. Right. one concurrent viewer, one chat rate. Okay, let's see what is going to happen. So it took out the sell side liquidity from this point, right? You can see the sell side liquidities have been taken. It means there must be a upward gyration of the price. Got it. Let's see what it's going to do. What's the time right now? It's 3:55. Obviously I'm not going to take a trade at this point. I'll wait for the price to do its own thing. Drawn liquidity is on the upside. We'll mostly wait for the London Gill Zone, or so it is gyrating up and down in the Asian session. Okay, so upside should be taken first for the Asian session. The upside thing should be taken first, then the downside thing should be taken. Wait, now wait. Okay, so here on the 11:15, right, the price is gyrating towards this buy side liquidities. Okay, it's on 6 hours. Okay, so this is the thing. And see, if the price wants to go downwards on Monday, it will go upwards. If the price wants to go upward, the Monday will be downwards. Okay, let's see what it's trying to do. So the liquidity has been taken above this point. Okay, so the liquidity has been taken. It can gyrate for the upside liquidity as well. Okay, let's see what it will do. At this point, you can form an entry here. What's the point right now? It's Monday 14:20. So the session is going to end at 3:30. There's no point I should take to enter it right now. It's not the time. It's 4 p.m. I'll wait for 5:30 p.m. This is the point of 5:30. It's 17:30. Okay, before 5:30, the price is rallied upwards. Let's see what it's trying to do. Okay, here's a displacement downwards, right? Now, can we expect the price to go lower? Yes, we can expect, but is there any fair value that the price can return back to? So there's a thin fair value gap in here, right? So first of all, thin fair value gap in here. Okay, any other fair value gap? No, no, no. Okay. Okay. Fair value gap has been touched, but the time is right now 12:10, and obviously I'm not going to be woke up at that point to take a trade. Okay. No chats yet. Anyways, fine. 44 minutes. I'm done. Today I've taken a session in the morning, and this is going to be an evening session, right? But anyways, I'll have to keep trading. It's a 100-hour trading challenge. Okay. I'll do it anyhow. I have to wait for the next day. See, on Monday the price has rallied upwards. Okay, showed me a breakdown, but it was not so good. It didn't take out any kind of low. It was just a swing back on a wrong side. Then might be that the price wants to go lower on Monday. Like averagely Mondays, then like opposite movement of the weekly movement. So I'll wait for the price to go near to this 1230, somewhere around 1230. Okay. So before 1230 the price is rallied upwards. Okay. So I don't think there's any sign of the price to come back. Okay. So there's a downward price swing at after 1230. The price rally upwards. So I will be looking for a downward swing. Okay. So this is a fair value. I could have entered in here and put my stop loss here, but it's not a good price swing. Okay, we can see like this kind of candle has already formed, but this length of the candle has not formed. Okay, so yeah, here we have the fair value gap. Okay, now wait for the price to wait for the price to come back to that fair value gap. Okay, and the price is in this fair value gap, then I can anticipate an entry, take a trade, but I need to be checking out on what should be my target. I'll expect this to be my target, right? What is this thing? But this is a fair value gap, right? I'll expect this thing to be my target. This low is not an important low anymore. Let's delete this thing. Okay, but yeah, here is one important low. We can see this is the low which is important. This is the first, I'll say. I'll see my trade to be here at this point, right? Okay, there are two levels of liquidities I can grab up to. Okay, so here we got into fair value gap, right? Done. And let's take an entry there. If I just anticipate an entry over here, how will I do it? I'll put my this thing at this point to the put. See, I'm not gonna pick this high. I'm gonna pick this high. It's just 1 2 pips. I'm not gonna take any kind of uh, risk. Okay, it's 3.81. Fine. It's okay. Fine. Got it. I think I'm just way too much cliche about getting high risk rewards. I should stop doing it. Okay, no chat rate, no concurrent viewers. Fine. It's okay. Left with 12 minutes. See if you could do a whole week in 12 minutes. No, obviously we can't, but anyways, I can form an entry. I'll take an open position, I'll sell, I'll do a market, I'll do current balance, I'll do 0.1%. No, I'll do 0.10%. I'll place a trade, let's see what's going to happen. Okay. Oh shit, man. Just $40 straightforward. Now, obviously, these liquidities will be taken, but I wanted the price to actually, give me some time to actually derive out, take out that target. Okay. See, this got taken, right? If it didn't got taken exactly, then I would have just kept going my stop loss in and in and in again and again. Got it. Well, let's see if you could form any kind of entry at this point of the time. But yeah, the fair value gap is way too much larger for me. If the price somehow comes back to this point, okay, I can put my target at this point. Got it. So this is the larger fair value gap. What's the time right now? It's 3:30. Okay, somehow the moment has ended. Okay, I have to wait for somewhere at 5:30 to actually get back the trades again. Ta-da! Here we have okay, let's just go ahead. Okay, got it. Is it 5:30? Okay, it's somewhere around okay. Yeah, the price went up, right? In this fair value gap. This low is not taken. This low is not taken. This low is not taken. It means it is generating to form a what do you call it? It's for trying to form a sell side liquidity, right? Okay. Oof. I was thinking of doing 2 hours here. 1 hour is going to just break my back. Okay, it is here. Let me just see on 1 minute time frame. It is touching this thing. Okay, I'm anticipating for it to go down. See, I could form a micro entry or not. Let me see if I could form a micro entry or not. Mm, no, I can't form any micro entry. What's the time right now? It's 20. It's like around 8 p.m. Okay, I can take an entry here. Okay, yes or no? Think about this. I can form an entry here. Stop loss at this high. This high is fine. Entry at this point. This low to be taken, right? Open position. What is this? Why I can't click it? Okay, fine. Selection, open position. Okay, fine. Market sell, current balance. Okay, see, we took a profit on the last point. $15 of the loss can be taken. Okay, let's go back and do what is going to happen. Shit, damn. Okay, let it just play out, you know. Oh, ho, ho, ho. Why did it went to that point? Okay, after this point where I took a trade, it did a very weird motion. So A35, it might be because of some kind of FOMC, right? It took out sell sides, took out buy sides. Okay, my buy side trade was there. Definitely this thing is going to be taken out somewhere. This thing is going to be taken out, right? But because I don't have any kind of uh, see, we can't know about FOMC. Okay, so we can't do anything else for this. Okay, the price went back to this point. Yes or no? What is the time right now? It's 9:30. Will the price go to that position or not? I'm unwilling to take some trades at this point. Mm, should I or should I not? Should I or should I not? Let me remind the price. I'm going to be taking a trade over at this point. Okay, whatever it is going to come, I'll just take a trade. Alright. So yeah, on this middle point, this is the high. This could be the low because see, this is not taken yet. This is not taken yet. So it means definitely it should be taken yet. Let me see if there's any chats because I am missing chats. Okay, no chats are there. Fine. We can just put open position. I'll put sell market. Sorry, I should put limit. Sell limit current balance not 15. This time, bro, we were at the loss at the last trade, so we are going to take a 0.1% of the trade. See, I'm taking a 0.1% of loss. Okay, it doesn't mean that shit. Not again. What's the time right now? It's 14 Feb 2125. So 14 Feb 2125. I'll have to load it again because it will not get saved. 14 Feb 2125. 14 Feb 2125. 9:25 p.m. Huh. Hey, why it is taking so much time to load? The network's good, okay. Yeah, it's fine. It's also fine here. Node layout 2022 GBP guys. Okay, we have just 5 minutes more for the session to end, but anyways, at least this thing forces me to actually take the trades. So hell yeah, we can't prevent the price. This is the moment I want to take a trade over here at this point. Okay, it touched that point. Okay, and it is gyrating downwards. Okay, let's see if it was a profit or loss. Nah, it was nothing. It's for 24. I'm not going to be woke up at that time, so obviously 5 minute will be a time frame. Okay, I would still be in trade, right? So again, this sell side liquidity not taken, sell side liquidity not taken. It means what? It means that okay. It means this sell side level should be taken first. But right now we have this buy side, we have this buy side. Is there anything else that can be taken? Yes or no? Uh, Let it be. I have to wait till what? Till the next 12 a.m. Okay. Hmm. Now let the price do its gyration, whatever it wants to do before that 12:30 mark. I don't care what it's doing, but yeah. See, this fair value gap, it has just been touched. Okay. It has just been touched, so the fair value gap, the chance of the fair value gap to come back into this thing has increased because it has just touched this point. So if it comes back to this fair value gap and gyrates in between, it is taking a sell side liquidity, right? You guys can see the buy side liquidities are here. If the buy sides gets taken, then we can anticipate a really good entry on the sell side because see, a lot of sell sides are there. Okay, yeah. So it's 17:15. Oh, it is again trying to generate liquidity. I'll have to wait for the market to come back to that point. Okay, now 12:30 is coming near. Let's see what it'll try to do. Okay, now we can decrease the speed and then go back. Okay, good. So we can see a downward move. It means the price wants to go upward or what? I want to see a good movement. Okay, so we didn't get any chance to have the moment, but somehow if we would have taken a trade. So on the next day it will go to 12:30. Okay, after applying the swap fees, the trade would have been done. Okay, but obviously we can't wait till at that point. But you can see a lot of buy side liquidity is formed. Okay, and this is what, this is around 13. I think, what's the time right now? Okay, so now it's 59 and 26, 27. So I'll try to end my session over here because I'm done, I'm tired. Okay, this takes out too much energy. It's 15 Feb 15. Okay, so this is day 7. On 7 hours we did 1 month and 15 days, so 1.5 months of total, what do you call it, back testing. So let's see how much time it will take for a year to do. Okay, so 7 hours is 1.5, so I want 12 divided by 1.5 is 8. It means 8 into 7 hours. We need around 56 hours to actually go through a whole year. Okay, so 56th day I might be able to do the whole year. Okay, got it. Then that is it. Take care. See ya. Bye bye. Have a nice day. Okay, and keep learning, keep backtesting.